Hello friends, welcome to Finance MCQ. I am CA Pritam Sangwan and today we will discuss Employee Stock Option Plan ESOP, which is part of Commerce and Accountancy subject of Paper 2, which is a technical syllabus of your SEBI Grade A exam. Friends, this technical syllabus is of 100 marks in Phase 1 and it has 2/3 weightage in Phase 2 of your SEBI Grade A exam. And friends, you can find entire technical syllabus of SEBI Grade A exam chapter wise, topic wise on Finance MCQ website in MCQ question format. You can visit the website and practice entire technical syllabus there. I have put the website link in the description box below. So let's begin. Friends, the first question is, what is an ESOP or Employee Stock Option Plan? So friends, it's an option given to directors, officers and permanent employees. Here friend, one crucial thing to remember is it's an option given to permanent employees and not to temporary employees. Very important. Remember this point. So it's an option given to directors, officers, permanent employees of the company or its subsidiary company, which may be within India or outside India, or to its holding company or to its associate or sister company. So option can be given to employees, directors, officers of any of these entity. Now the question is, which option? So friend, option is to purchase or subscribe to the securities offered by the company at a future date and at a concessional price, generally at a lower price, since it is issued to employees or officers of the company and not to the outside public. So friends, just to recap, what is an ESOP? It's an option given by the company to its employees, officers, directors to purchase or subscribe to the securities of the company at a future date and at a concessional price. So I hope ESOP meaning is clear to all of you. Now let's talk about Companies Act provisions related to ESOP. So friends, as per section 62(1), company can increase its share capital, that is they can raise additional capital. They can do so by issuing ESOP, and for this purpose they need to pass a special resolution, and they also need to follow any other conditions as may be prescribed. So friends, as per Companies Act, a company can issue ESOP to its employee by passing a special resolution. So now let's move further. Friends, now let's talk about some important terms related to ESOP. First one is vesting. Friends, vesting is a process by which the employee is given the right to apply for the shares of the company against the option granted to him under ESOP. Next term is vesting period. Friends, it is a time period between grant date, that is date of issue of option, and the date on which all specified vesting condition of ESOP plan are to be satisfied. That is a vesting period. Next term is option. Friends, option means a right but not an obligation which is granted to an employee for a specified period of time during which he can purchase or subscribe to the shares of the company at a predetermined price. So I hope now the meaning of option is clear. Next term is exercise price. Friends, it's a time period after vesting of option within which the employee should exercise his rights to apply for shares which is vested to him pursuant to ESOP plan, that is exercise period. Next term is exercise price. Friends, it's an price payable by the employee for exercising option or purchasing the shares of the company under ESOP. Next term is intrinsic value. Friends, it's an excess of market price of the shares under ESOP plan over the exercise price of the option. In simple words, intrinsic value is market price minus exercise price. Next is fair value. Friends, fair value is the amount for which this ESOP share can be exchanged between knowledgeable or willing party in an arm's length transaction. For example, suppose you are having 1000 shares under ESOP plan and your friend is willing to purchase them at say rupees 200 and market price is say rupees 210 and exercise price is somewhere around 180 that you have to pay to the company to subscribe. So friends, here the rupees 200 which is your friend is ready to pay will be the fair value of this ESOP shares. So I hope meaning of all these terms are clear to you all. Now let's move further and take a practical example to understand some of these terms in details. So friends, here is the example. Say on 1st April 2020, a company grants its employee ESOP of 10,000 shares and condition they have put is waiting period of 2 years. That is 2 years you have to continue in the service of the company from this date. And the third is ESOP can be purchased between 15 April 2022 to 30th April 2022. So that is the purchase time, between that they can purchase, and the shares can be purchased at rupees 250 and the actual market price is 320. So now you guys tell me what is the grant date here in this case. So friend, the grant date is 1st April 2020. That is the date on which the ESOP is issued to the employee. Now what will be the vesting period here? What is the vesting period here? Here the vesting period is 2 years. That is the condition that the company has laid down, and that is 2 years. Now next is what will be the exercise period here. So friends, exercise period is 15th April to 30th April. That is the time period in which the employee can exercise his option to purchase the shares. Now what will be the exercise price for this? Exercise price is rupees 250. And what will be the intrinsic value? The intrinsic value will be rupees 70. And how it arrived? It is the difference between actual price minus ESOP price. So that is my intrinsic value. So I hope with the help of this example you all understand these terms more clearly. So let's move to the next point. Friends, now we will just quickly go through the ESOP process, how ESOP is carried out. First, company will grant the options to the employee, then we'll have vesting period. Friends, it's a mandatory requirement that there has to be minimum 1 year of vesting period. That is 1 year difference between grant date and option exercise date. Then we will have exercise period during which employee can buy the shares. Then the apply and payment of exercise price by the employee, and then company will allot shares to the respective employee. So this is the entire process from grant of option till share allotment. So now let's move to the next point. Friends, now let's discuss classification of ESOP for accounting purpose. Though accounting treatment of ESOP is not asked in your SEBI exam, but I feel it is relevant to discuss here. So just quickly we will go through it once. Friends, ESOP is classified into equity settlement and cash settlement. And friends, under equity settlement an employee will receive shares, and under cash settlement an employee will receive cash. Friends, under cash settlement, difference between exercise price and market price of shares is paid into cash to the employee and his ESOP plan is settled. So I hope these two classifications are clear to all of you. So friends, let's quickly summarize what we have discussed in this video. We have talked about what is an ESOP, what are the important terms in ESOP. Then we talk about ESOP process. Then we talk about classification of ESOP. It can be classified into two parts, equity settlement and cash settlement. So friend, this is all about ESOP and I hope this video helped you to understand ESOP topic, which is part of your paper 2. Friends, for more practice of this topic in MCQ format, I request you to please visit Finance MCQ website. It has entire SEBI graded technical syllabus, which is paper 2 of journal stream in MCQ format. It has 2000 plus subject wise, topic wise MCQ questions to practice. We have added explanations for correct answers wherever required. It also has 25 test series for your technical syllabus to practice. So friends, there is lot of study materials to practice on Finance MCQ. Do visit the website for more practice and increase your selection chances. Friends, website link is in the description box below. I will come up with new video. Till then, take care and thank you so much for watching.